interventions in place. For effective trade to take place, we need people to produce the goods, and that's the private sector. And for the private sector to be able to produce those products, they need to have financing and appropriate financing that is affordable and effective and timely. So today's webinar, we're going to hear from various panelists who will be providing us. We have the practitioners from the financial sectors who are going to give us insights of what products they have, but we also have the academia who are going to give us the narratives on the challenges that we have as a region in terms of financing, but also we have the practitioners who are the private sector who experience the challenges that we go through during doing business. Of course, business is during these challenging times of COVID and as well as the crisis in Russia and Ukraine is not making business any easier for the private sector. That said, I would like to take this opportunity to thank the EU through Africa Rise for this opportunity that we are having today to discuss trade finance in the region, and also to welcome and thank the Chair EABC for sparing time to come and share with us his wisdom on trade finance in the region. We also welcome Mr. Jose Louis from the EU and the representative of the EAC Secretary General who is going to make remarks on his behalf. I also welcome all the participants to this webinar and thank you for sparing time to participate in this webinar. Without further ado, allow me to invite Mr. Nicholas Nesbitt, the Chairman EABC and Kenya Capital Markets Authority, to make some opening remarks. Thereafter, we shall invite Mr. Jose Luis Gonzalez from the EU also to make his remarks, and then we shall invite the Secretary General to make his remarks. Thank you. Mr. Nesbitt, Chair, please, the floor is yours. You're welcome.
Good, thank you. Can you hear me?
Yes, Chair, we can hear you.
All right, good. Let me welcome everybody here to this meeting this morning. Thank you for attending. I look forward to a fruitful discussion this morning with everybody, and hopefully we'll all have some good takeaways to take away from the session today. If you can forgive me, I'll show my face so you know it's not me, and so you know it is me and not a robot or something else talking to you. But if you forgive me, the bandwidth is not so good where I am, so I'll turn off my camera. That said, I would like to take a few moments this morning to make some comments about the trade and the existing status of trade in East Africa. And as we all know, it's crucial. Africa trade is only about 2% of global trade exports, 2% about the same of imports, but we account for about 17% of the world's population. There are many reasons why this is not higher. There's trade that's lost because you don't have access to finance. The instruments are not well understood or easily accessible, and many of the companies that would like to get trade finance perhaps did not have the supporting documentation or the ability to be given it by the regulated financial institutions. So FSD Africa had a report where they looked at East Africa and the Horn of Africa, and the barriers were many. In agriculture, the collateral was very high. In construction, people did not understand what it took. In many areas, they came up with, they were able to discover the reasons. And textiles and garments, for example, the traditional collateral requirements required by banks make it all very difficult. And then recently, of course, COVID has made it that much more challenging. So, you know, for us to move forward, if we think about what are the possible solutions, how do we mitigate the risks of trade finance? It's the first area is to really focus on where are the opportunities to reduce the risk through co-insurance, through reinsurance. What can we do to provide capacity support? How do we extend the PRI market to provide insurance to local, not just foreign investors, and so on. As far as technology is concerned, talk a lot about platforms. We must encourage the development of marketplaces where companies are able to know who they are selling to or who they are buying from. And we need to find ways to put trade finance solutions in these marketplaces. So that means encouraging the ability for companies to trade across borders and ensure that all of the issues around how products move can be resolved. So these companies that could emerge and strengthen, as some people call them, trade techs, they would need to be able to replicate their solutions across different parts of Africa. And we at the EABC are looking for opportunities to support such companies to be able to do it. There are challenges, of course, that all of our trade is in US dollars and it has to go across the seas to New York to be cleared. So what are the opportunities for us to find common ways of trading, whether it's using blockchain-based finance or other forms? These are things that should be explored. From a regulatory standpoint, there are challenges in how you ensure compliance, crossing from one border to the next, forex liquidity challenges, and so on. The trade infrastructure, that holds significant potential. Warehousing, cold storage, how do we develop market intelligence to determine where these facilities should be placed? I had a call just before this one with a firm that has developed a tremendous amount of data that could be used to determine exactly where people are buying certain goods, where they are shipping them from, and they're able to get down to 25 by 25 meters to determine exactly where goods are moving in different parts of the target markets of Africa. In Nigeria, for example, in Lagos, they're able to tell, almost pinpoint, how many packets of platforms in East Africa and ensure that we have the ability to enhance trade by giving people data, and so they can make decisions more accurately. So when we look at who can help and how can they help, development partners, they create a critical role here in bringing expertise, bringing skills, helping us to adopt policy frameworks and how to adopt technology in innovations, such as what I mentioned, blockchain and other distributed ledger technology. Financial services providers, they provide the capital that the SMEs need to help us drive the issues I just described. And we do have a need for sector-specific opportunities for these financial services providers to tailor the instruments. Regulators, we touched on that. How do you ensure that the value chains can become more competitive? And how can we ensure that we design more flexible and more targeted operating systems? Now, the national focal points, they play a massive role as industry associations to support longer term growth. By providing opportunities like this for people to come and discuss what is out there, how do we share ideas, in particular have in each of the countries, and take those expectations around what needs to be resolved to improve business back to the legislators and those making decisions on policies and even laws. So I hope today, as we talk through these different issues and on the panels that look very interesting, we'll be able to get into more detail about all of these areas and how we address the regulatory issues, technology, platform building, the policies, the role of supporting institutions like the associations that I just mentioned, FDIs, banks, and so on. And we really have a good discussion this morning. So let me conclude there and say that my heart is in East Africa. I'm passionate about making this part of the world as successful as it possibly can. And a lot of that success will definitely come through improving trade and ensuring that we really are one East Africa, and that we can really embrace our new brothers and sisters from the DRC to be part of East Africa and take the best and the greatest of what we develop to the DRC as well, and ensure that they can uplift their markets and as well. So with those few comments, let me end there, and thank you all for the time and for attending the session this morning. Thank you.
Thank you, Chairperson, and we appreciate the wisdom and the points you guided us. At this juncture, I would request Mr. Jose Luis Gonzalez, representing the EU, to make his remarks. And thank you again for honoring us our invitation. Mr. Jose Luis, the floor is yours.
Thank you, and good morning. I hope you can all hear me.
Yes, we can.
Excellent. So yeah, I just wanted to say a big thank you to the Africa Rise team, to the EABC team, and our esteemed panelists today. I think it's high time that we bring the private sector together with the public sector to discuss some of the challenges and some of the opportunities within East Africa. I think this will be one of our 3 sessions that we'll be holding with the private sector today, going on trade and finance. And we just wanted to recognize that this EU-funded Africa Rise program has really supported the preparation of this webinar, and in terms of opportunities and barriers for the private sector. And we want to kind of show that the European Union is ready to support private sector development in East Africa. In addition to Africa Rise, we also have our EU EAC Market Access Upgrade Program, where we are already trying to improve EAC exports, supporting participation in regional and global value chains, with a particular focus on EU and targeting key export-oriented sectors, so agro-industrial crops, coffee, tea, cacao, horticulture, avocado, spices, and peas. And some of our objectives in this markup program is really to improve the business environment, doing that through enhancing capacities to advocate for the removal of sector trade barriers, improve sector standards and SPS measures and harmonization. We also want to enhance SME competitiveness through our awareness and compliance with market requirements, value addition and access to finance, and also business promotion, SMEs, trade and investment support for export and investment. So we see EAC is well positioned from our side to receive additional resources for establishing as well a regional digital market, and to consolidate the work that we're already doing in Markup 1. And we're going to be starting a Markup 2, or hopefully in the next year, where we're aiming to support and continue to support the export competitiveness of EAC SMEs. In addition to that, maybe from the public sector side, and particularly focusing on the EAC itself, we have our EU EAC Core program, which is our common objectives in regional economic integration program, where our objective there is really to support the deepening of EAC's regional economic integration through advancing the implementation of the customs union and the common market protocols. So with the customs union, we are targeting 3 areas. So an integrated regional customs ICT platform that should be rolled out. We will be supporting a regional risk management and valuation function that should be strengthened. And we also want to strengthen the coordination and monitoring role of the EAC Secretariat. For the common market side, we really want to promote free movement of services, improve implementation of EAC commitments on liberalization of services. And then from the EAC Secretariat, we then want to capacitate them to manage the programs and be able to deliver on its mandate, and also to have an indirect management with the EAC Secretariat in our core program. From a continental side, we're also supporting the African Union and the Africa Continental Free Trade Area implementation. And given that EAC is probably the most advanced regional economic community, I think we need to take advantage of that. And I think without the private sector as our engine, I don't see how best we can move forward. So I think this webinar comes at a high time. As mentioned, this is one of 3 that we plan to do. And so I'm looking forward to today's discussion and the other 2 that will follow. So a big thank you to the Africa Rise team led by John Clifford and Nathan, and a big thank you to EABC and the EAC Secretariat for also your coordination and support. Thank you all, and I hope you enjoy the session.
Thank you so much for highlighting us on the interventions, that the initiatives that the EU has in promoting the integration, both within the EAC and the African continent. We very much appreciate your support, and we look forward to further collaboration as we work towards developing this region and also growing our intra-EAC trade as well as trade with the rest of the world. At this juncture, I would like to invite the representative of the EAC Secretary General to make his remarks. Mr. Soro, are you connected? Please, the floor is yours. Mr. Soro? Hello?
Charles, I understand your team are having difficulties in connecting. I don't know. Even the director of trade, Alhaj Chibo, was calling me that he's unable to connect.
Yeah, I've tried to share with him the link, and I'm not sure whether he's seen it. Let me try. Tell him I've sent him an email because I was trying to call him, wasn't picking my call. I've sent him an email.
Yeah, I've also forwarded to him the link to try and use the EABC link.
Probably we can go to the next whatever. When he joins, then we can have those remarks in order to save time. What
Yeah, I agree.
Okay, thank you. At this juncture, allow me to invite Nathan to make a presentation.
Thank you very much, Charles. Let me share the screen and we move from there.
Are you able to share your screen, Nathan?
I'm sharing. Can you see it?
I haven't yet seen it. I don't know whether the other participants are seeing it. Can anyone confirm that they are seeing Nathan's screen?
No, we are not seeing it, Charles.
Let me share again.
See your screen, but you don't see the presentation.
Can you see my screen, Charles?
You can now see your screen, but probably put it on slideshow so that it is wide enough.
Yeah, thank you very much, Charles. I recognize
Charles.
Mr. Nick Nesbitt, the chairman of EABC, CEO EABC, the representative of European Union, Mr. José Rui, colleagues from EAC Secretariat, dear panelists, allow me to go straight to the presentation. We made a presentation on trade finance in EAC, barriers, opportunities, and potential interventions to drive uptake. We are looking at this all process comes in EU-supported Africa Rise program to support private sector. And we are doing this as part of the activities that lead to private-public dialogue. So this analysis that was done on trade finance in the EAC focused on particularly EAC, the 6 partner states, and this was a desk research done from the recent publications. We are saying that trade is crucial to development of African economies, and unfortunately, African trade is still modest compared to other regions globally. We also found out that Africa comprises of 17% of the global population, but only accounts for 1.8% of global trade exports and 2.1% of global trade imports as per 2019 figures. The modest contribution to global trade in Africa highlights the importance of expeditiously addressing barriers to trade to accelerate regional economic growth. The continent's trade finance needs are expected to increase as the implementation of ACFTA. The moment we started trading on as a single trading bloc, then that emphasizes the point that trade finance needs to support the Africa trading. East Africa here in particular has recorded the lowest total export trade in goods and services in 2020 compared to other African sub-regions. We can see a bar graph here showing how East Africa recorded the lowest, particularly with 2020 when COVID struck everything down. The light color here shows exports and the blue color shows imports. And when it goes up to 2020, then COVID changed everything. While Northern Africa tried to be quite better off compared to East Africa. Northern Africa and Southern Africa, we are quite better off compared to Central Africa and Eastern Africa. When you zero down to East African community, and as COVID-19 affected world economies, which did not spare ESA region, it slowed down most economic activities, especially trade and investment. When you see across the years from 2015 to 2020, you will definitely find the intra-ESA, the total imports and exports slowing down, declining, and intra-ESA exports being at almost a constant level from 2015 to 2019. With a very, very marginal increase. So the total trade for ESA declined by 6% from 55.3 million in 2019 to 51.9 billion in 2020. Total exports from the region in the same period increased by 3.1%, with 16 million to 15 million in 2019. Total investments in ESA decreased by more than 46%, falling from 11 billion in 2019 to 20 billion to 25 million in 2020. This fall is attributed to COVID-19, which led to a shutdown of economic activities. When we go back to the topic of today of trade finance in ESA, we found that trade finance encompasses traditional and emerging solutions that facilitate trade and comprise 5 key products: the documentary trade finance, the structured commodity finance, the trade credit and potential risk insurance, the supply chain finance, and export and credit agency finance. But these big trade finance products have got some other specific examples of instruments. For example, under documentary trade finance, we have documentary collection, documentary letters of credit and guarantees. Under the structured commodity finance, we have warehousing finance, export finance, revolving credit facilities, borrowing-based facilities, and under the supply chain, we have receivable purchase solutions and loan-based solutions. But we found out that these products, however much there are many, there are barriers to increase the uptake of these trade finance products. Firms are facing challenges in managing these trade finance products. The recently published reports by African Development Bank revealed that the key barriers to uptake exist both at ecosystem and trade finance provision level, thus emphasizing the importance of holistic interventions for meaningful impact. So ADB found out that there are high interests and fees. There are delays in bureaucracy in trade finance delivery. There are high collateral requirements and pricing requirements. There are limited trade finance instruments tailored to SMEs. There are limited risk mitigation instruments. Banks have this limited capital and limited awareness of trade financing option that goes also up to by the borrowers. So these barriers are also seen, they are also manifested when we see farmers being discouraged from applying for trade finance. Why are they discouraged? They fear default and rejection. They don't have enough collateral. They are facing high trade credit pricing, and the bureaucracies that lead to time consuming also affect them. Other challenges, as I mentioned earlier, with lengthy approval process. So farmers fear to apply. They feel discouraged to apply because of all these challenges. However, even though we have these barriers that affects our SMEs and farms in general, trade finance have got some intervention opportunities that exist to mitigate the trade finance risk. Subsidize cost of adopting emerging technology and implement regulatory reforms. In other words, some are grouped as general ecosystem solutions and others are trade finance specific solutions. So those which are general, one would consider improvement of trade infrastructure, enhancing SMEs' competitive advantage. They are the first-hand borrowers, therefore they need to be competitive so that they are able to uptake these trade finance products. And there are some regulatory reforms that are required to make this a success. The specific opportunities for trade finance may include the trade finance mitigation risks and the current technology solutions that would stand in to address more barriers holistically and creating a conducive environment for increasing the potential to achieve the meaningful impact in addressing trade barriers. Opportunities also exist to improve available trade finance products and increase their uptake across the region, particularly the documentary trade finance, as I mentioned earlier. There are technological solutions today, such as the SWIFT Corporate to Bank Trade Envelope, MT798. These are the technological solutions that are being put on the table by our leading commercial institutions, finance service providers, that will always go ahead to drive the uptake. We have also structured commodity finance. This is to increase warehouse financing by establishing relevant regulatory frameworks and provision of financial literacy so that they help to address the knowledge gaps and use market intelligence to determine the warehouses to generate sufficient produce volumes. Then we have trade credit and political risk insurance. These create a greater collaboration between providers, capacity building support to enhance understanding of insurance technicalities, and able to push the local investors to drive uptake. The supply chain finance, they exist for development partners to help drive further uptake by providing capacity building support to financial service providers and SMEs to increase their familiarity with the technicalities of how these instruments work. For the exporters, there is also the opportunity there through creation of centralized databases that increase transparency on SMEs, know your client data, as support to improve responsiveness to customers. We also considered what ESC should do, what EABC should do, what development partners should do. Generally, we are saying that EABC, as an umbrella organization of the private sector, can be able to be behind the capacity building programs, to mitigate capacity constraints behind why firms are discouraged from applying for trade finance. And by doing this, EABC should raise advocacy on availability of trade finance options by working with the finance service providers and be able to raise advocacy so that they can reach out to many and drive the uptake. ESC Secretariat, we consider them as enhancers of operation environment, expediting the establishment of the private sector fund that has been pipelined, table the private sector trade finance policies before the relevant sectoral councils or the relevant ministers so that the regulatory environment can be enhanced and trade regulations and protocols are able to be adopted, or creating a conducive environment for the thriving of private sector in ESC. Development partners are also part of this ecosystem in terms of risk mitigation solutions tailored to specific sectors, revolving funds, risk guarantees. They did some during the COVID-19 pandemic. Then also providing support to regulators in developing the policy frameworks for trade finance products. For example, factoring laws, which are highly required, financial support for financial service providers to adopt technology innovations, such as electronic documented solutions and distributed ledger technologies, given the high cost of adoption. The finance service provider themselves, the banks, they provide capital and other financial services that SMEs need to scale up.
What is it?
Scale up. Pardon?
No, I have sent it was supposed to go to internal audit. Check with Susan.
Let me continue.
To send in the morning.
The financial service providers were saying they should be able to tailor instruments provided to help meet the SMEs needs better, such as provision of rolling facilities to cater for production cycles, for example, agricultural SMEs, import cycles for construction SMEs, and textile SMEs. The regulators, our central banks, our regulators, they play a vital role in creating the broader enabling environment, of course, working with government and the holistic ecosystem needed to support sustainable long-term growth of trade finance. Regulators and policymakers at ESC level should look at policy harmonization efforts, legal frameworks for innovations and fintechs. There are young entrepreneurs in fintechs and innovation who need to meet the compliance challenges and bridge this gap.
Hi, is the meeting on?
And we are saying that SMEs need to improve because remember, SMEs, they are the direct beneficiaries. They are direct beneficiaries. They need to work on their compliance requirements in order to increase their eligibility and be able to benefit from these trade finance products.
Nathan, you're muted, please. Nathan, muted. Please unmute.
Charles, we've lost Nathan. We've lost Nathan, Charles.
Oh, Nathan? He was
Yes.
muted.
Yeah, I'm saying.
Nathan, we lost you in the previous slide, the last one on SMEs. Then you can go and conclude thereafter. Nathan? Hello, Nathan?
Hear me now? Can you hear me now, Charles?
Yes, we can now hear you. I was saying we lost you when you were looking at the SMEs.
Okay. I was saying that SMEs need to improve their compliance requirements in order to increase their eligibility for trade finance products. Because they are the direct beneficiaries, they need to come up with how to enhance their competitiveness by increasing in competitive value chains and designing internal operating systems and processes and improving access to digital-driven services so that they can be able to be competitive enough and be able to tap into the finance products available. While concluding, I'm saying that different trade finance categories, various innovations have helped facilitate efficient delivery and uptake of products. For example, emergence of commodity exchanges that leverage virtual trading platforms are increasing the uptake of structured commodity finance. More generally, emerging tech and fintechs play a key role in accelerating trade finance uptake by enhancing process efficiency. I said them, distributed ledger technologies are increasingly gaining prominence as solutions to reduce information asymmetries within trade, though they are at a nascent level in Africa and in East Africa in particular, but this should be supported so that the documentary evidences would always be less and time consuming. Specific interventions existing barrier needs to be integrated holistically and well sequenced to help increase uptake. The growing need to strengthen an enabling environment which supports the sustainable provision and usage of finance instruments in order to optimize their impact. That's where I want to stop. Thank you very much for listening.
Thank you, Nathan, for the comprehensive presentation on trade financing in the region. But before I open the floor for discussions, I would request Alhaji Kiboa to make comments on behalf of the Secretary General. Then we can, thereafter, we can open up the floor for discussions. Alhaj, Director, please, the floor is yours.
Thank you, moderator, and thank you, colleagues. We had some disruptions at the beginning, but thanks, Chair, for giving us the opportunity to deliver the remarks of the Secretary General at this important occasion. Chair, all protocol is observed, and Chair, we note the importance of this interaction and the importance of trade finance in boosting trade in the region, particularly for our goods and services. And Chair, to also note that of recent we have had some drop in the level of exports for the EAC. And owing to several reasons. And Chair, much of what I would have liked to note has already been covered in Nathan's presentation. But we want to note that trade finance still eludes many of the companies and the private sector in the region. And the financial system in the region still is not supportive enough of our private sector to access the finance. Therefore, this puts us in a position where borrowing is expensive, and the issues and the other problems associated are as highlighted in the presentation. We can't conquer anymore. But Chair, we want to remark the private sector of the expanding EAC region, the market more the opening up by DRC and joining the EAC, and the fact that the EAC region is opening up to the continental African continental free trade area. Therefore, there is need for us to enhance the amount of goods and services and investment opportunities in the region arising or taking benefit of these developments. Here, considering what has been said, and without repeating what Nathan has said, because much of it was contained as well in the SG's remarks. Some complementary measures to what Nathan has just highlighted include maybe some significant training to the beneficiaries and the private sector in the area of how to manage trade finance, what it is all about, how can we manage trade finance better? Because as highlighted by Nathan, one of the problems that the private sector faces is the high default rate, and therefore resulting into loss of the collateral that the private sector pledges when they get finance. So we feel there must be a lot of training programs for our private sector in the different subsectors on about this whole animal about private sector finance, trade finance. Chairperson, I think the public sector also needs to complement the financing levels within the banking system, probably by investing significant resources under the warehouse receipt system and all other such instruments and mechanisms which boost trade finance. That one would also help to cushion or complement what the banking system is offering under trade finance, because it is all not enough. I think that one we all agree. But why is there urgent need for trade finance? Why can't the private sector thrive on the existing finance that may exist within its balance sheets? Probably here we have to deal with the whole issue around the competitiveness of our economies. How do we reduce the cost of production? How can we enhance the competitiveness of our farms by reducing the cost of production, by enabling them to produce quality competitive goods, by enabling them to produce en masse, and they do not waste a lot of time and tying up the little capital that they may have. When the Northern Corridor Initiative was on board and the time required for transporting cargo between Mombasa and Kampala and Kigali respectively reduced from 21 to 6 days and from 18 to 4 days. That one helped a lot the private sector in terms of untying the would be required capital finance for the operations. So, Chair, the whole competitiveness framework and environment and the doing business environment in the region needs to be worked upon very, very significantly. And in turn, we trust that this would reduce the trade financing requirements for our private sector. Another area that could be looked upon is to move in the direction of digitalizing the trade operations. Things like digital cargo tracking systems, single window for customs and clearance operations, and the way the whole thing ties up to the competitiveness and doing business environment. We take advantage of digitalization and e-commerce. The ESC is working, the ESC Sectoral Council on Trade, Investment, Finance and Industry last week just passed the e-commerce strategy. But holistically, we need to generate and move on programs relating to digitalizing the trade operations, not only for revenue collection and the border operations, but even how we export, how our traders export and import, because these ones have a lot of leverage and the impact on the capital requirements for business and consequently on the development, on the trade financing requirements by our private sector. So you can count on the ESC Secretariat and the ESC initiatives to work on this animal relating to the need to provide trade finance and also reduce on the trade finance requirements in the region so that our trade, investment, and industry can thrive. Thank you so much, Chairperson and colleagues.
Thank you, Al-Haji, for making the remarks on behalf of the Secretary General. We do appreciate the insights you've raised. Now, allow me open the floor for further discussions by the participants. The participants can make a comment on the opening remarks made by Mr. Nesbitt, Chairman EABC, and also the EU remarks by Mr. Gonzalez, as well as the President. And also the remarks, the presentation of Nathan. Thank you. We would like to start with John Bosco. Carissa, please, the floor is yours.
Yeah, thank you very much, Charles. And first of all, allow me to appreciate and record my appreciation by the chair for the opening remarks, and also the Al-Haj Rashid from ESC Secretariat, and the representative from EU. Yeah, this is a very interesting insight and topic, but maybe my question is that to all those who have delivered the opening remarks, why trade finance? Why trade finance? Why is it? Someone asked me, why are you underlining and emphasizing trade finance different from other financial products? And I think that is the question we need to dive deep and explain why trade finance is important in terms of facilitating trade and in terms of growing our intra-regional trade. I realize that there has been mention, and that this goes to Nathan, and I want to again thank him in terms of giving a number of products, financial products. But when you look at the usability of those products, you find that the trade finance landscape in Africa or in EAC, it is still a challenging because it targets more large enterprises, large companies, as opposed to SMEs, who constitutes about 80% of our trade profile or our trade landscape. So I think it is important for the speakers to explain, maybe to define why trade finance should be given a special attention and treatment than other financial products, and what we can do to ensure that our SMEs, the uptake of trade finance among our SMEs is upscaled. Currently, the data from the African Development Bank indicates that the uptake is around 20% for SMEs, which is very low. And that has an effect, a detrimental impact on our intra-regional trade and as well as our continental trade. So I thought that it's important that maybe we give a clear definition before we dive deeper into the detailed discussion. Thank you, moderator.
Thank you, JB. Do we have any other person who wants to comment before we ask Nathan to make his reaction to that? Probably also, if we have some financial sector players in here, they can also help and chip in to respond to the question raised by JB. Okay.
Chair.
Yeah, I may not.
Yes.
May I proceed?
Yes, please. Please go ahead.
Yes. The presenter talked about SME compliance. That they need to work on compliance. I think we need to be very specific on that, on which areas that they need to comply with. Yeah, and we missed some parts of the presentation.
No, the problem.
Thank you.
Madam Limo, Nathan, I hope you are noting the questions. Caiphas, please take the floor.
Thank you, Chair. I think I want to echo what came from Nathan. I think something very important, but I also want to echo the emphasis on why trade finance that the executive director just mentioned, but specifically on the instruments, the trade finance instruments that Nathan presented. There are a variety of them. And I think the executive director touched on the issue of usability. I think it would be useful for us to get a context as to why and to what status, how many of those instruments are actually in use, and if so, what are what is the status, what are the challenges, what is the coverage, and that allows us to be able to relate to the subject matter as to the uptake and where the main issues with respect to the uptake is coming from. That's something that I just wanted to probably alert. If Nathan has additional information, that would be quite useful. Thank you.
First, Daniel, can take the floor.
Thank you so much, Chair. I'm in this forum for the first time. My concern is for the fresh traders. Where do we start? Which is that first step to come on board? And then we get things rolling. Thank you.
Thank you. I think that one might have JB to come in and help. However, Nathan, you may take on the floor and make some responses to these queries and proposals that have been made. Thank you. Hello, Nathan. The floor is yours, please. We seem to have lost Nathan. Probably we can continue taking some questions if there are any, and we shall share with him when he comes back, when he rejoins the meeting.
Charles, maybe I wanted to suggest that if there's anyone from EU Africa Rise, given that this has been a part of their initiative to shed more lights, what we can do as Africa in terms of the high uptake of these instruments, especially trade finance. And I want again to thank them for their initiation and commitment to fund the private sector.
Thank you, JB, for the intervention. Is John around, or Mr. Mr. Gonzalez, I mean, from the EU? Probably could respond to some of those questions that have been raised. In the meantime, we can hear from James. James, the floor is yours, please.
Thank you, Chair. My name is James. I work for TRAPCA. I must admit I don't work for Africa Rise, so I wasn't part of doing the report. But just to, as we wait for Nathan, to highlight maybe a couple of things based on the questions that were raised by JB and others. There were a number of instruments that were highlighted by Nathan in his presentation. And in line with the question that was asked by JB, one thing that I need to highlight is this. If you look at most traders in, not only in East Africa, but in Africa essentially, you will find that most of them are categorized as SMEs, as was lightly pointed out by Nathan. And most of these, if they are to go to a bank in order to get financing to export, one challenge they will face is that using the traditional forms of financing that banks have, they may not be able, for instance, to give in that collateral that is required. What trade finance does is to provide instruments that are underpinned by the transactions that they're involved in. So for instance, you may have a trader who is going to export consignment of maize, for example. There is an invoice which has been issued or a purchase order that has been issued, which can actually form the basis of him getting financing from a bank. So what the trade finance instruments that have been highlighted do is to enable exporters or traders to be able to get financing without necessarily relying upon the balance sheet or indeed the challenges that they have with collaterals. So that's one thing that is key. And I'm sure when the next sessions come, when it comes to usability, the other question that JB had raised, The issue to a large extent is that most of our traders are not aware of the existence of these instruments. Some of them are even easy to use. But to a large extent, what you find, I'm sure, I think that's a question Kefas asked so that Nathan can pick up. Most of the traders in our region and indeed on our continent, what they would use when they talk about trade finance pretty much is just letters of credit. And yet there are so many other instruments that are important that can help them to be able to grow their trade portfolio. Let me stop there. Thank you very much, Chair, for the time that you gave me.
Thank you, James. Probably we can hear from Pierre. Pierre, the floor is yours.
Thank you, Chair. Thank you, Chair. I was trying to unmute myself. So my name is Pierre Berthelot. I am from Business ACP, which is a facility in Brussels supporting the EU ACP Joint Private Sector Development Platform, which is overseeing a portfolio of 600 million of intra-ACP projects in the area of private sector development. And I'm just taking the floor to say that we are actually, as part of this EDF 11 envelope, looking into the possibility of an intra-ACP project on trade finance. And the starting point really is, if you want, the premise that trade finance, because it's calling in its present forms for very strong collaterals, it's not very attractive both to SMEs, but not to financial institutions, which consider this activity as a very high-risk activity. So the idea of the possible project that we are sort of considering presently is to look into the possibility of de-risking this perception of high risk by financial institutions by somehow supporting through some blended finance mechanism the activities of the financial institutions in ACP countries in the area of trade finance. And it's interesting, one of the questions talk about what are the products available. The first step in that proposed project will actually be to undertake a diagnostic of what are the trade finance products offering and what are the barriers to their use. And finally, another step that we are considering is how to see if there's a need to develop new innovative products that are more responsive to the needs of ACP SMEs, and within that context, consider this blending instrument. So, I mean, this is still on the drawing board, but it also explains my participation in this meeting today, for which I really congratulate the organizers for the initiative, and I do look forward to the conclusions and also to further interactions as we continue on our own thoughts here at the intra-ACP level. Thank you, Chair.
Thank you for those comments, dear participants. Let me just check if Nathan is back to make some comments on this. In the event that he's not here, I would request my colleague Waturi to take over for the next session of the panel discussion. And okay, we have a hand from Professor Maggie Kigozi. Please, the floor is yours.
Thank you very much. I hope you can hear me.
Yes, we do.
Okay, excellent. And thank you for this discussion. It's really critical that we begin to, that our SMEs begin to succeed a lot better than they're doing at the moment. And I thought I'd just touch on what the private sector and the financial sector is doing. There's a lot that's happening, you know, the digitalization, accessibility to banking products of various types, be they online, be they through things like M-Pesa, Mocash. Then there is the banks have come out to come and meet us as SMEs. We have agency banking. So I think we need to recognize and support more the role that the financial private sector through the financial institutions are doing. And we look forward to when East Africa, we can have, you know, the financial system also working in, you know, across our region. So I thought I'd just add that as we are racking our brains about, you know, what projects can be done by our partners, by, you know, the government, let's just remember that the private sector is doing the main access to finance to people and support that side of it, regulate it better through the banks, make sure our people don't lose their money. Yes, so thank you very much for organizing this. I do congratulate our Peter, Honorable Peter, for the achievements so far. Bringing DRC on board could not have been easy. Thank you so much. And, you know, we are really excited at the new addition to our markets. So let me stop here, but I congratulate ESC and thank you for the work that you're doing.
Thank you, Professor. It seems Nathan is not yet back. I'll request now my colleague Waturi to take on the next session. Thank you. Over to you, Waturi, please.
Thank you, Charles Omusana, and good afternoon. A very good afternoon to all the panelists and distinguished guests who are here, ladies and gentlemen. I think we've had a chance to listen to the detailed presentation, to you know, have a short Q&A or reactions to the presentation. But I believe there's still a lot of unanswered questions. And maybe this is a good opportunity for us to, you know, now interrogate further through the panelists, through each panelist, so that we're able to get a deeper understanding of these financial trade finance products. But most important, find out how we can improve the uptake in the region. I would like to kindly request everybody to mute so that we only give the panelists an opportunity to speak freely and clearly during their sessions. I'd also like to thank the chair of EABC, Nick Nesbitt, for honoring this webinar, and the EU representative, Jose Gonzalez, and representatives from the EU and Africa RISE. Thank you very, very much for being part of this. So without further ado, I'm going to invite Mr. John Kalisa. John Kalisa, I would like you to kindly, but very briefly, introduce yourself and the organization that you represent. Then I'll go ahead and ask the question.
Yeah, good morning, all the viewers, the participants for this webinar. I'm John Bosco Kalisa, the Executive Director for East African Business Council, based here in Arusha, Tanzania.
Thank you very much, JB. I think following the presentation today, how would you rate private sector awareness of the existing trade finance products offered by the banks in the region? I think the feeling is that the uptake is considerably low. Why do you think this is the case? And I suppose this is something that you know, has been picked up from the conversations that we've had earlier.
Yeah, thank you very much, Waturi. And again, thanks to the organizers. And this is, again, a very interesting topic and insight on trade finance. So coming to your question, again, that the uptake is very low from the private sector in terms of understanding the instruments related to trade finance. As I mentioned, I was looking at the statistics, the study done by African Development Bank, UNECA. The uptake by SMEs is around 20%. while in other countries, developed and developing countries, the uptake is around 80%. So the biggest challenge on my side where I stand is that there has been an issue of information asymmetry in terms of the financial institution that offers the product, as well as the SMEs, understanding the requirements and understanding the requirements and then the needs of the SMEs in terms of the trade finance. Let me give you, maybe someone has to mute. There's an interruption. So I was saying that there has been an issue of information asymmetry between the bankers that owns and hold trade finance vis-a-vis the SMEs that are interested in trade finance. So we need to bridge the gap between the trade finance and understanding those products that were ably highlighted by Nathan, the 5 instruments. And I want also to thank James from Tropica, who mentioned that the only instrument we know under trade finance is a rate of credit. But from the presentation of Nathan, there are other instruments that are embedded under trade finance. So my response is that those instruments are not known to SMEs. And that is where we need maybe to put our attention and the focus in terms of those instruments to sensitize, raise the awareness for our SMEs to understand those other new instruments. Yeah, let me stop there. Thank you, Watuli.
Thank you, JB. And it's good that you recognize that the EABC has a role to play, obviously at the regional level. But I believe your focal points, who are the national business membership organizations at the partner state level, also have a role to play. What quick steps can you take to quickly raise awareness and uptake of trade finance? And what sort of partnerships do you see yourself getting into to be able to raise this awareness? Because this is really a service that is provided by the banking sector, and it is their role and responsibility. What sort of partnership do you see yourselves getting into?
Yeah, indeed, that's a very pertinent question. One is that as the ABC, we are well positioned in terms of taking a positive step in raising awareness, sensitizing our members, and working closely with our financial institution to roll out numerous trade finance products. As I mentioned, that trade finance is different from other instruments, financial instruments by the banks, because it is usually short term, as James highlighted, and the risk associated with it is not so high compared to other products. So we need to take leverage on that and ensure that our members at the regional level, at the national level, understand these instruments, which enables them to do trade, to conduct cross-border trade. So the step we are taking as the ABC, I've started engaging a number of banks, and I want to record my appreciation to Stanbic Bank and KCB Bank. They are ready to, they have those products and are ready to work with the ABC in terms of starting sensitizing our SMEs about these products, and also the affordability in terms of the requirements. There is a tendency also, I wanted to highlight that the traditional tendency in our region has been that or for you to access funding, any sort of funding, you must have a collateral security. And I realized that for trade finance, as James highlighted, you just need your invoice. You just need to enter into a contract, whether you are a supplier or whether you want to buy those products. So an invoice becomes an instrument to enable you to trade, to even access the trade finance instrument. So that kind of information gap, that's what EABC could stand and help our members to understand and link them to the banks that have those products. Let me also state that there are a few banks in the region that also have those trade finance instruments. So it is also our task to undertake a deeper diagnostic study in terms of looking at which banks does offer trade finance. Not all the banks offers trade finance. Again, the study done by African Development Bank indicates that even not all the banks have those products. There are very few, but even those few doesn't have kind, they don't know their clients. So what we are doing at the ABC also, know your customer precondition, and we are loading it with Afrexim Bank. KYC is one of the steps that we can undertake to sensitize our members in terms of record keeping, in terms of knowing your clients, knowing building a kind of a culture of creditworthiness. So that is some of the steps we're undertaking in terms of sensitizing, educating our SMEs, our members in terms of the various trade finance products. So that is the step we are undertaking as the ABC, again, through our national focal points. And we have national focal points across the region: Uganda Private Sector Foundation of Uganda, Rwanda Private Sector Federation, Burundi, and also Kenya and Tanzania. And now of recent, we have also opened our network under FEC, Fédération Entreprise Congolese. So we have a very strong network we can leverage on in terms of extending the trade financial instruments in the region.
Thank you very much, JB. That is quite reassuring. We hope to see in the next, couple of months, more interaction between the banks and the private sector at different levels, both the large, small, medium enterprises, and even going as far down as the, micro and informal traders to raise awareness of this key, financing instrument. And I must just say, I think when it comes to awareness, we know awareness never comes to an end, because there are different sorts of people that are entering into the private sector on a daily basis. So it's something that needs to be continuous and sustainable. So thank you very much for your input, JB. I would like to invite Ms. Lightness Millet, if she could kindly, but very briefly, introduce herself and the organization she represents.
Thank you, Atul. Many thanks to East Africa EAC to bring up this topic, and I'm happy to participate from a private sector. I'm working with KCB Bank Tanzania. I'm heading on trade finance unit. Thank you.
Thank you very much. I'd like to ask Patrick if you could meet anybody who may online is not as but an opportunity for the listeners to to focus on the conversation. And Ms. Lightness, yes, now we can see you clearly. Thank you very much.
Thank you.
Sorry, I was muted, I guess, when Patrick was muting everyone else. So as you've had, Ms. Lightness, I think there's a general consensus that the awareness levels in terms of the the various trade finance instruments and products that are there remains very low in this region. Could you kindly share experience from where you sit? Is it something that you continuously promote? How do you go about it? And what would you recommend to both the financial service providers and the applicants?
Thank you. I can say from the presentation which has been presented by Nathan, I have noted the categories of the trade finance products. Most of them are being applicable, but to understand this is not a traditional mode of business, and this is a trade finance, it's a bit difficult or techniques. Let's look on one point whereby you say the category of documentary collection. When you meet a customer, from experience, is coming to the bank requesting for a service, first will be asking for a loan, but you look what exactly this loan going to be done and the repayment schedule for that loan. Is it capable for that customer? What is this customer going to do? Now you'll find that this customer specifically need to get letter of credit, or need to get an SPLC from the exporter's side, or need to get pre-export financing. It's the matter of knowledge. But also I have noted that for these SME customers, the importer and the exporter, they don't get to understand the pillars which is around trade finance product. Before doing business on across the borders, you need to know the mode of payment you are going to use. Will it suit you? Will not affect your business? But also, we need to understand the risk involved for the importer, exporter, and the bank which will make the payment. But we see also the mode of financing. It needs to be understandable between the parties. And the information should be shared well so that the bank can give you a good product which will suit your business which you are doing. For SMEs, mostly they are coming asking a loan, but need commercial banks to give awareness in the market, give awareness to the SME people, give awareness to all doing trading, understanding not only to come for a loan, but also there are structures which can suit the business without putting a collateral to the bank, but the risk involved can be mitigated by the bank. Thank you.
Thank you very much, Lightness. I think it's clear from your conversation that there's a role for the business themselves to play in terms of being very clear in terms of what business exactly are they doing, what are the challenges in terms of financing, and therefore get advice from the financial institutions in terms of what instrument best suits them. And you're right, I think most people just know how to take a loan or an overdraft. It's usually the easiest. So thank you very much for that. Also, from your perspective, are there specific sectors, that you believe are best structured to attract trade finance products specifically designed for SMEs?
From my point where I'm sitting as a trade personnel, it has not yet to come for a specific structure or specific sector. Each sector has its own challenge when it's come to apply the trade finance product. Until they get proper knowledge on whichever product will be suited for them, is going to say this customer specific is understood it. Good thing is I can say for the market of Tanzania, for the bulky procurement of the fuel or petroleum product, they have been using well the letter of credit, whereby all the MCs has understood that this is the best way of doing business rather than dish out money in the front. In the first date of entering a contract, I should get my product, then I pay. That's what I can say. But all the sectors still need to get an education on it, get more knowledge, getting to understand they're buying from who, what the model will suit my business. I will not be stuck on doing my business with the foreign, but also even international banks come in, have a collaboration with the local banks so that all the traders can be sectorized and then benefit on each product per sector. Thank you.
Thank you very much. What exactly would you describe as what KCB Tanzania is doing, to engage these specific sectors? Do you have specific sessions with them? How are you engaging these sectors?
Thank you. As a KCB, not only KCB Tanzania, but as a KCB group, there have been engagement on training for all front desk team. When I say front desk team, I mean the customer service, branch managers, business bankers, relationship managers, several engagement, several training on trade products, so that when they meet the customer, they explain to them, they taught them, so the customer can be in a position to understand which service I need from the bank.
Thank you. How about the potential borrowers? Are you meeting with the Association of Horticulture Exporters, for example, or the Tour Operators Association or Travel Agents Association?
For the exporters, we have met some of them, as it has been elaborated by ABC, have been supporting them, but also we have engaging them on some of their exporting process by engaging CME also to support them. And this all may have been falling under supply chain, where we finance through pre-export financing, but also on structured commodity, is applicable in KCB, whereby we are supporting the customer exporting under pre-export financing.
Thank you very much for that. Maybe just as a final question, how is the regulation process in terms of trade finance? And how can that be improved? Are there any regulatory issues that need to be addressed, not just for trade finance, but for banking, generally speaking?
Yeah, there's some regulatory issues need to be addressed, specifically when it's come a customer using a structured finance, whereby the banks have a way to mitigate the risk, but still, due to regulation, we are required, let's say it is in Tanzania, to secure that transaction in 100% or in a certain percent. But you will find that this customer has a security which is the only mode that he has to have a mortgage. That has been a challenge, even for those who are getting contract financing, as you are sure that the employer of the contract will pay timely. We don't need to get a full security as a mortgage as is required by regulatory. I think there's something need to be done on a regulatory regarding the security, which is old mode of business. As we are going, we need to compete with the foreign companies which are coming in country or which are coming to East Africa to invest.
Thank you very much. I think it's good to always pinpoint of the exact regulatory issue that's a barrier, or particularly in terms of ensuring uptake of of banking products in not just in a country but in the region. And I think these are some of the areas that you could work with very closely with the Tanzania Private Sector Federation, the CEOs Roundtable. I'm not sure whether you have a bankers association in Tanzania, but I think it's important that these issues are raised at that level and addressed, because then they open up possibilities and opportunities, not just for the private sector, but also for even the government. Sometimes even the government puts in place regulations that work against them. Yes. So thank you very much. I do appreciate your input and I appreciate your time. I'll now move on to the next panelist, Dr. Cleophas Chekwoti. Maybe I'll ask you to kindly start by introducing yourself and the organization that you represent. In the meantime, if you have any questions, I would like to kindly ask you to type them on the chat box so that I can take up questions after that.
Thank you so much, moderator. My name is Cleophas Chekwoti. I work for ESAMI. ESAMI is the Eastern and Southern African Management Institute, an intergovernmental institute. And TRAPCA, which is the Trade Policy Training Center in Africa, is a specialized center of ESAMI focusing on capacity building with respect to trade. Now we're covering about 49 African countries with the objective of ensuring that all officials, government, private, civil society have a clear conceptualization of international trade and be able to facilitate whether it is analysis, negotiations, and obviously implementation. And within that context, what is being discussed and the subject matter of our webinar today, trade finance, is definitely at the core of what we do. So briefly, that is about us, like this way.
Thank you very much, sir. Perhaps I could, it's clear that there are capacity gaps that exist at different levels of private sector, at specific subsector levels. And this may have been inferred during John Bosco Kalisa's response. What can we do to close these gaps? Because the banks say that they have trained their frontline staff so that when a client comes in, that they're able to provide this. They say they are engaging sector associations, but it doesn't seem to be, hitting home. What more can be done? So what capacity gaps, both from the financial services sector and the private sector, exist, and what can be done to close them?
No, thank you so much. I think for me, I want to echo, not the narrative. Yes, we say trade is important, it's a driver of our economies, but we also know that at the center of that are the enterprises that actually produce the goods and services that then are traded across the borders. And within our context, especially from not only EAC, but an African context, SMEs, actually, you start with the micro. I think you also mentioned it, the micro, the small, and probably medium. One of the main binding constraints that is reported in any enterprise survey that is done is financing. Yeah, but now when we link to trade, basically we're talking about these entities being able to produce a product that's competitive and can penetrate the export market, not just having market access, but being able to be moved, whether it's a good or service, to that particular market and compete in that particular market. How does that be able to facilitate these transactions, to be able to allow both funded and unfunded transaction mechanisms, bank intermediated mechanisms on trade finance for it to be able to actually be actualized. So when you look at it, and then with the presentation that has already been made and the capacity issues that have been highlighted, for us, we immediately see capacity issues both from the supply side, that is the financial institutions being able to provide actually these instruments. And I think that has come out quite clearly. That is mainly letters of credit, but we have a number of the others. So then the immediate question is, why is it that the other trade finance instruments are not actually being made in terms of awareness and in terms of extending to entities who actually seek this kind of support from the financial institutions? One aspect that we uncovered is that we did a needs analysis with some of the banks, for example, in Tanzania, the commercial banks. And it became clear that even among the banks themselves, there are very few, if they are there, staff who have a clear conceptualization of these trade finance instruments. So you can immediately see one challenge that emerges from there. If then the officials who are from the financial institutions are not well conversant about some of the instruments, they are more likely not be able to talk about it and be able to bring that in the discussion with the clients who may be seeking or may not even be aware, as we have also heard, that there are some of these instruments that they could leverage on instead of going for a loan. So we see that as something quite clear, emerging, and it's actually interesting that trade finance is an area of financing that is less talked about. It's not even across almost all the institutions in Africa that do training, whether it's universities or so forth. Trade finance is the missing aspect, and yet is so crucial. And then we've also seen that most of the reasons for the rejections for those enterprises who seek then trade finance solutions and they make applications, the rejections are mainly attributed to insufficient collateral. They're mainly attributed to inability to comply, for example, with the credit ratings. And obviously, you'd expect that the financial institutions are also more likely to be risk averse to deal with the entities that are not so sure of that their credit worthiness. And then I think it was mentioned by JB, the issue of know your client, know your customer, those international and anti-money laundering kind of regulations have also made financial institutions become more risk averse. And that in itself then makes it a little bit difficult, coupled with the fact that you have entities both on the supply of trade finance and then the demand side, the ones applying, also with the knowledge gaps on some of these issues. So from our perspective, we see there's a very big role for capacity building. And we've already started that as TRAPCA. And what are we doing? Currently, we've ensured that we have programs that address the different levels of these capacity needs, both at operational, not only awareness, but also tailored kind of training to ensure that there is conceptualization among officials in the financial institutions, but also in the private sector. But we've also taken that a little bit a notch higher to provide a program, actually a master's program, an MSc program in international trade finance. It's the first one in Africa, the whole continent, which is accredited. And now we have 2 cohorts that are already on board, going through the training. And our idea then is we complement this and work with our stakeholders, EABC, obviously, this is EABC, ESC, and then other stakeholders to be able to ensure that then there is more outreach, we get more of the entities and their officials, both from the private sector and the financial institutions, but also the regulators to be on board on this, so that then we can be able to enhance their conceptual understanding of these trade finance instruments, and in the process bridge that capacity gap. So for us, we are already on it, and it was actually interesting that when we had an interaction with the Afreximbank, then this became very clear that there's an aspect that is not being addressed, and yet is so central to international trade. So this complements our other capacity building interventions targeting international trade that I mentioned earlier. So to just assure you, we are already on it, and we know the aspects that we need to focus on. Thank you very much.
Thank you very much. Yes, you've hit the nail on the head. There's definitely a supply and demand issue. I think awareness is not just on one side, it is actually on both sides. It's not just about awareness, it's even the way, these products are structured operationally at the banks, and that there are no specific tailored, products for specific sectors. And I just wanted to, maybe just use an example of the matatu industry in Kenya. A couple of years ago, the banks did not understand how the matatu industry works. It's a cash flow, it's a daily cash flow kind of business. So when you're lending somebody money to buy a matatu and you expect them to pay it at the end of the month, this guy receives cash every day. And if he doesn't, put some of it towards that loan, by the end of the week, it might be consumed by other factors, which I shall not name here publicly. So they were forced to structure a product for the matatu industry, for the public transport industry, where it allows for the industry to be able to pay their loans even on a daily basis. And that was very helpful in terms of building that industry. So I think it's important that even the service providers themselves understand a specific sector, exactly how does it work, because then that will help them to be able to structure a product that works for a specific sector, because we all work in very different scenarios. But also from the demand from the potential borrower. I think quite often when we go to banks, we don't like being asked very many questions. We don't like being asked for very many documents. But I think if and even if you look at in terms of, if you look at any survey that has been done, on small, medium-sized enterprises, many of them will tell you that their first port of call in terms of borrowing money is from family and friends. Why? Because there's less documentation required. But that also tells us a lot, is that the way some of these businesses are, this business are not being run like corporates, this at the same level that a bank is operating at. So perhaps they may be able to, find a way to engage them differently, maybe work through cooperatives to be able to extend that sort of service to them, where there's maybe less requirements for, audited accounts and all manner of documents that are required to process a loan. So I think the onus is on both both on the supply and the demand side. You've briefly highlighted some of the technical assistance programs that SMEs can have to enhance their competitiveness. What else does SME have and TRAPAC have in place to be able to work towards building the competitiveness of SMEs in this region or in this continent?
No, thank you so much, moderator. I think you've also touched on very important aspects of this conversation. I was just listening to you before I come to this, and then I was asking myself, okay, why is it that we have a number of the entities resorting to money lenders, for example? Yeah, with their ridiculous kind of rates and stuff like that, but they still go to money lenders. It has something to do with the time, the duration in which it takes to process, and then the requirements, I guess. So probably tailoring and getting those nuances into the product design on trade finance will be important. Yes, in addition to what I've said, yes, obviously, since awareness is also a big issue, we definitely will work and are designing programs to work with our stakeholders to be able to come up with the products that that address, for example, regulations. What are the hurdles in the regulations? Yeah, and then in that way, we can be able to provide advisory, technical advisory kind of policy briefs to the regulators. And then when we're looking at the private sector, we're also keen on products that drill down to the nitty-gritties. For example, I mean, I know there could be a number of entities that are trying to help the SMEs for those that are keen to export on the export processes, the export requirements, and all this. We have a number of those institutions, but we feel there's still a lot because it is not just on the SMEs, but it is all the stakeholders, including at the border points that are part and parcel of this process to be able to ensure that then the products and goods and services can actually cross the borders. So we also have kind of training, if you want to call it, training products that we feel can be tailored to specific operational and practical aspects of it. And before we're having engaged some kind of discussions with the freight forwarders, just to look at how we can be able to assist them and then be able to provide aspects of the training that could elevate and amplify what they're already doing as an association. So for us, we're open to that. So there's technical advisory. We also, of course, do case studies, and then we do a consultancy to be able to then have flexible and more tailored programs that address specific needs of the different stakeholders. The beauty is that then we are in a position to quickly identify the expertise on each of the areas that are needed, because outreach is not only regional, not only continental, but it's also global in terms of our pool of experts that actually we leverage to be able to deliver then the kind of capacity building that is required. Thank you.
Thank you very, very much. Again, I ask participants if you have any questions. I think we're just coming to an end. It's important that you put them there so that we're able to ask. I'm just going to throw a question to any of the panelists. What role do you think mobile banking, or M-Pesa can play in terms of financing micro, small, and medium-sized enterprises? I know there are various, providers who are providing, loans at that level. There's Fuliza, there are all manner of products. That's all I can say. But how can we? Does that look like an opportunity for us to? Because banks sometimes can be intimidating. Walking into a building can be quite intimidating for some people. Can we look for ways to adapt mobile technology, M-Pesa, to be able to bridge this financing gap? This is an open question. Just lift your hand up and I would be able to invite you to respond. JB Kalisa.
Yeah, thank you very much, Waturi, for raising that question. And again, as I mentioned, and from different panelists, the biggest challenge with trade finance and other instruments is the lack of information. And I think I called it information asymmetry between those who have the product, like financial institutions, and their clients. There is a big gap. So I see M-Pesa playing a critical role in terms of bridging that gap, because M-Pesa reaches to a very wider range of our micro, small and medium enterprises. So that would be one of the avenue, embedding some of these products, especially the trade finance, within their M-Pesa product, because of the access, because of the reach, the wide reach of the M-Pesa to those clients whom the bank cannot access. So I see a window merging some of the product by M-Pesa with the financial institutions, and I think it is a window we can explore, and that also relates to the information shared by our colleague Kaifas, and I think we need to see how we can work with Tropica and financial institutions and have a kind of a tripartite arrangement, MOU, how we can support our SMEs, how we can also support the banks to put forward those good products they have. Yeah, that's my response to you, Waturi.
Thank you, JB. Any other panelists who'd like to ask a question or respond? Cleophas?
Yeah, thank you, moderator. I think to just complement what JB has mentioned, I think mobile money is changing a lot of things. Like you rightly pointed out, there are a number of products that have been built on the mobile money platform to be able then to enhance the services arising from it. I mean, one example is microinsurance. Yeah. And that has been now made a little bit possible because of the mobile money kind of availability, enabling a number of those clients who would not afford to have a lump sum to be able to pay for insurance, for whether it's health or whether it is for business and so forth. So this could easily then tie with the trade finance instruments, even some kind of micro export credit that could also, for micro enterprises that are producing products and exporting just across the border. Mobile money then could actually make it possible to develop and translate a number of these trade finance instruments into that micro sense. And that would, in my view, boost the uptake and boost the usability, and of course, in the process, be able to increase even awareness. Because once they get to know their products and these products are there, the ones that are providing are more likely to want to also disseminate information coupled with what other stakeholders will be doing. So I think mobile money provides a very good opportunity to be able, especially to reach a wide array of stakeholders who may be keen and actually have what could benefit from these trade finance instruments.
Thank you very much. Thank you very much. I see Lightness from KCB wants to also respond to this, and this has created quite some excitement. And yes, I do agree. I think quite often we fail to look at a quick way to raise awareness and to reach these people. I think every so often you receive a text from your bank, uninvited, you have not even subscribed to it, but it also gives you an opportunity to learn about a specific product. So yes, I do see a partnership with the mobile telephone companies. So Lightness, you may, respond to this as well.
Yes, thank you. From my point, mobile money has helped him a lot for the importers, especially when the time they're clearing goods from the ports. They've been using it as the fastest means of making payment at any time, and they can clear their goods timely. So as means of payment from mobile money, but even when they need to purchase goods has been quickest. There's no documentation that has been required, but the trade has been done and it is timely. Thank you.
Thank you very much. I do not have any other hands up, and I'm looking at the chat box and I do not see any questions, which means two things. That A, we understood everything that was presented to us. We've been part of this conversation and discussion. Or B, we did not understand the thing. And I hope that the former is the case, is that we've understood everything that needs to get done. We understand the partnerships that need to be made, and we need to move fast as a region in particular. You know, the African Continental Free Trade Area is not waiting for us. It's going to happen whether we like it or not. It's moving. It's going to move very fast. I think we need to look at ways in which we can finance trade within the region. So thank you very much to the panelists. It has been a great honor.
Waratiri.
Yes.
Yes, sorry, before you close. I didn't hear quite clearly on the issues of requirement of collateral or security when SMEs are asking for for money from the banks or even other institutions, because this is actually a challenge, and it needs to be addressed. Thank you.
Thank you, Limo. I will take this back to KCB and maybe the gentleman from Esami and Tralak, if they have any ways in which we can go around the requirement for collateral. I don't know that it is completely impossible to get rid of it, but maybe they have some innovative ideas around it. Lightness, maybe you want to respond to that?
Yes, thank you. On the challenge of collateral for the trade finance products, as a bank, we have come to a point that we write a paper, put in a structure of the transaction, and getting an approval on it that we have shown all the risk has been mitigated. As we said on trade, we need to know mode of payment. We need to know risk involved. How could it be mitigated? And then we need to get the information and financing. If it has been structured well and show that all the risk involved has been mitigated, we can finance the customer without getting the mortgage as a means or old mode of doing business by having full collateral to the bank or registered. Now, that will fall mainly on a structured finance. You need to structure a transaction whereby the importer or exporter and the financial institution come to an agreement, understanding what is supposed to be done by the importer, what is supposed to be done by the exporter, what documentation should be shared to the bank, so that the cycle or the whole supply chain is well monitored. At the end of the day, we make payment without a collateral in the first place. Thank you.
Thank you.
Yeah.
JB, do you want to
Moderator, may I go on?
Hi, fast, please.
Yes. No, I just wanted to complement that and say, okay, within the we got that, and it's very clear we have other trade finance instruments that do not necessarily need collateral. For example, receivables accounting or invoice discounting, forfeiting, factoring. The exporter goes to the financial institution, gives them the invoice and sells them the invoice. And once the products have been delivered, then they're able to make that profit, because then they buy the invoice at a discount. So when you look at that, it's not like the traditional mode of lending where you are going to provide the loan, you need the collateral in case you default on the loan and stuff like that. Already the invoice in itself is an instrument that is being exchanged, and that covers the risk that the bank would perceive. And of course, it will just necessitate a little bit of check that all is well within what is in the invoice and the value of the products and so forth. So to me, that's also one possibility we need to explore. And I think it goes back to the fact that there are a number of other trade finance instruments that are not yet being utilized, which do not necessarily need collateral in the traditional sense. Thank you very much.
Thank you very much. And yes, you've also hit the nail on the head, is that not all products require collateral. And even those that we require, I think we can find creative and innovative ways to go around it, including, we call it credit insurance. I remember in the tourism industry, travel industry, basically live off credit insurance. I have one final question from a gentleman called Bernard Muhati. Please go ahead. Bernard Muhati, your hand is up. Your hand is raised. Do you have a question? Okay, I can see he's probably left the meeting or something, or he's muted. So I would like to close and first of all take this opportunity to thank each and every one of you for participating in this very important webinar. I would like to invite John Kalisa to make remarks on behalf of EABC. Then he will be followed by a EU representative, Jose Gonzalez, and finally somebody from the EAC, just to give very brief closing remarks. For me, I believe the closing remarks that make sense is what are we going to do next, so that we can keep you accountable to these promises. Thank you.
Thank you very much, Waturi. Again, I want to first of all appreciate you for moderating this session very well, and also appreciate the remarks that were delivered by the chairman and Alhaj Kiboa and the EU representative. Again, my key takeaways from this discussion is that, and as you Ebre highlighted, is the next step, or key takeaways that we need to carry forward. One, we've underscored the need for trade finance. It is very important if we want to grow our intra-regional trade, if we want to increase our trade with the rest of the world. So trade finance is a panacea, is a lubricant for trade. We need to support it, and we need to roll it out among our SMEs. So simplicity is very key. We need to simplify the instruments related to trade finance. That is very critical. Raise awareness among SMEs. That is the role of EABC. So work closely with Tropica in terms of the costs they have for our SMEs and both micro, small, and large enterprise. Also work with the banks, a number of the banks, and it has been Ebre highlighted by Kaifas, that even the banks, they also don't understand, some of the officials don't understand these products. So we need to work together with a number of the banks that have these trade finance instruments. Again, at the EABC, we need to engage continuously and consistently with our national focal points to map out the needs of our SMEs in terms of the financial requirement and gaps. We need to roll out our engagement, especially with regard to exploiting the financial opportunities provided under EU ACP, the window on trade finance, in terms of de-risking some of our business. The last component that was very critical that again EABC need to explore more is the usability and the use of our mobile platforms as one of the tools to reach out to those segments of our society that at the moment our banking sector are not able to engage. Lastly, promote KYC, know your client, improve the creditworthiness of our members with the bank, share the information with the bank about those as the business community that have a very robust record keeping. So basically, that's what I would say, and I really want to thank everyone. Again, thank the team that have been behind this: Geoffrey Kamanze, Charles, Nathan, the entire technical working group between EAC and EABC, of course, with support from Africa Rise EU. So we look forward to carry forward these instruments, and we look forward to move quickly in terms of raising awareness to our SMEs. Santine, and have a great afternoon.
Thank you very much, JB. And now I invite EU representative Jose Gonzalez to make his closing remarks.
Thank you, and good afternoon again. I don't want to echo too much on what the other moderators have said. I just want to again give a big thank you to the Africa Rise team for organizing this important session. Again, this is session 1 of our 3 in total that we want to do with the EABC on various areas on trade. I will look forward for the next 2 ones. From our side in the EU, we want to express again our commitment to support trade finance, support trade and services, quality infrastructure, and regional economic integration. We see the private sector as a key player and a key role and the engine in really transforming our regional integration goals and mandates of the EAC Secretariat. So I think let's use this as a basis for us to continue to work together between EABC, the private sector, but also the EAC Secretariat, the national ministries of trade, to ensure that we take our region and our continent to the next level. So from our side in the EU, again, thank you to EABC, thank you to EAC Secretariat, our esteemed panelists and moderators. We want to say a big thank you to all that have attended, and we look forward to welcoming you in the next two sessions. Thank you so much.
Thank you, Mr. Gonzalez, and it is indeed reassuring to hear your commitment to support this area. I think the need has been made very clear here, so we look forward to working to make these things come into reality. So finally, I'd like to invite the Director of Trade at the EAC, Mr. Rashid Kibor, to give closing remarks on behalf of the EAC. Honourable Rashid Kibor. I see that he's not in, so maybe I will give closing remarks on behalf of the EAC. Just to thank you very much for this partnership. That is East Africa Business Council and the EU through African Rise. It is indeed a great honor to spend an hour and a half, 2 hours to interrogate the areas, some of the areas and tools in which we can help to build trade in the region. I think the EAC and the EABC is working very closely now, and we look forward to taking this forward. One thing I'd like to reassure EABC is that we'll like to follow up on this conversation, and that is the EU as well, to ensure that we start working towards raising this awareness, increasing the uptake of this instrument so that we can increase trade in the region. So without further ado, I would like to thank you very, very much for your kind attention and to wish you a lovely afternoon. Thank you very much.
Thank you very much, Ms. Wat.
Thank you, Aturi.
Thank you very much.
Thank you, everyone. Thanks.
Thank you so much.
Thank you, everyone. Thank you.
Bye-bye.
And thank you, everyone who attended.
Thank you from Burundi. Thank you.